Welcome to the Wyoming Women's Business Center webinar series. Today we are excited to welcome Kim Vincent back again for another QuickBooks webinar. QuickBooks 103, Deep Dive into the QuickBooks Reporting Process. I am Jonathan Howdeshell, one of the business counselors at the Wyoming Women's Business Center, and I will be your moderator today. Our speaker today is Kim Vincent. She is the co-founder and COO of the Local Crowd LLC. Kim has worked extensively in both privately held and public service organizations. She has worked for the Wyoming Women's Business Center and the Wyoming Small Business Development Center in counseling and training. Kim has an MBA and a BS in accounting and has extensive experience in assisting small businesses in financial record keeping and reporting systems. Kim has been using QuickBooks Intuit products for over 20 years and is a QuickBooks Pro Advisor. This webinar is being recorded and will be available on our YouTube channel. Just go to youtube.com and type in Wyoming Women's Business Center. Make sure you subscribe and check out our other videos. If you have any questions during the presentation, please type them in the chat area and I will ask them for you. Now, without further ado, I present to you Kim Vincent.
Well, thank you for that wonderful introduction, Jonathan. I always appreciate the opportunity to talk to clients of the Wyoming Women's Business Center. You guys are just, a really awesome organization that's available statewide to help people. And I think sometimes people look at the name and think, boy, do I have to be a woman to be part of what you guys do? And it's a good reminder to say that you really try to work with all clients. I mean, you have loan clients that are men, loan clients that are women, and so I think that the more people can share the word about what you guys do, it's just awesome to see the reach that you can gain. Today we're going to talk about, we're going to do a really quick review of some of the stuff we touched on in the past in terms of using QuickBooks, because everybody, if you're in a small business, you need to have some kind of tool to help you track your efforts. Truly, if it's worth doing, it's worth measuring what you're doing. And so, some of our earlier discussions were on, well, is QuickBooks really the best tool? And, the point of this discussion today is not to say that you have to use QuickBooks. I just think you need to consider some type of an accounting program to really help you through this process. Because overall, your goal as a small business owner is to, really be able to jump in at any point in time and take a look at where are you financially in your business, what's going on, how's your cash flow. A lot of people just rely on their bank account to tell them, what they can spend, and I think you want to be a little more sophisticated in terms of how you approach your cash flow and looking at the balances in your business. So you'll be looking at a profit loss statement on a regular basis. You're going to be looking at your balance sheet on a regular basis. So, one thing that in the introduction, Jonathan, you said that I had a BS in accounting, but my foray into Wyoming was actually originally as a geologist 30 years ago. So I came in as part of the oil and gas industry, and then I went back to school and did the advanced business degree, but I just really gained some real interest in the financial side. So you don't have to be an accountant to do this, but you want to really understand the language and how whatever program you're using, how that program thinks about what you're trying to do, because it has certain ways it processes your transactions. So you communicate to the software by saying, well, I think that this particular account, I'm going to categorize my account, I'm going to categorize my expenses, and you just, the most important thing is that you're consistent in how you do it. So we're going to go through that a little bit more today in terms of using the reports, and then we'll have some time at the end for questions. So I do always like to take the opportunity to promote the Wyoming Women's Business Center. It's really such a vital organization in the state in terms of the services that it provides. There's some overlap with the SBDC in terms of business services, planning, and counseling, but we really try to focus on the micro enterprises, some of the more disenfranchised businesses. If you don't have good credit, this might be an organization that could really help you through that process. And there's lots of networking and educational opportunities. And then we have a really awesome microloan program and other tools for access to capital. So that's, I think, how we can distinguish our organization from some of the other business support services in the state of Wyoming. So let's talk really quickly about what we did before, because you could go back if you wanted to and review some of these previous webinars. In QuickBooks 101, we did address the why do I need an accounting program? Please don't make me learn another software. But I think you have to be able to have a pulse on your business. You have to be able to tell a really accurate financial story, and that's what this tool is going to do for you. It's going to allow you to look at what's going on in your business at this point in time and say, wow, maybe I could do this a little differently, or maybe I need to spend less on marketing, or maybe I need to look at my margins for how I'm doing my pricing. It gives you some really high quality, timely information, so that when you need to share information with your stakeholders, whether that stakeholder is your spouse or it's your banker, or you might have to give information to your insurance company so that they can, support you with the appropriate insurance policy. It's right there. It's ready for you. You don't have to dig through the paper and recreate any type of information. So you can accomplish it with real simple transactions lists in a spreadsheet. In fact, if you don't do a lot of transactions, you probably don't need to have a more sophisticated software, but you do want to think about transforming the way that you account for all the activities in your business. You need to have a process in place that can really give you good, accurate information. Is QuickBooks really quick? Well, it's once you get that process in place, and once you really develop those consistent procedures, and it becomes a really important tool for your organization in terms of saving you time. It might take a little bit of time up front to get it set up, but in the long run, it's really going to be worth that effort. In the last session in 102, we really looked at tracking loans, assets, and credit card activities. And today, what we want to think about, well, and this is some highlights from 101 and some of the takeaways. So again, I want to emphasize this over and over, is you need to have some process. It could be because there's so many different ways to enter the data into this program. You just need to do it consistently every time. And at the end of the process, you want to have an accounting professional review your trial balance so that they can do your tax prep or whatever services you need them to provide. And again, last week, beyond the checkbook, we tried to look at some of the more tools for tracking loans, which is really important for a loan client. You want to know what your upcoming payments are going to be. You want to understand how much of that payment is going to go towards reducing the principal that you have left on that loan, and how much of it goes towards the interest payment. So again, the end goal is really a manageable process so you can have some really accurate, timely financial reports. So let's look. Here's what we're going to do today. This is what kind of what my plan was, is we're going to dive back into QuickBooks and spend most of the discussion navigating QuickBooks, looking at the different types of reports, looking at the ways that you can customize the reports and change the reports that are appropriate for your business. Because there's so many different ways you can use this software in terms of getting information back. And for the most part, you're going to be operating in probably one area or two areas. If you're a cash-based business, you're not going to be looking at receivables. You probably won't be entering your bills into accounts payables. But if you have employees and you have to do quarterly reports, you'll probably be looking at, some of the payroll reporting things. So we're going to go through some of these different categories of reports. I'm going to show you how you can use the information and customize the report to you. So it allows you to click into a field on the report. This is what I love about this type of software, is you can dive into the detail, open up the detail, whether it's a check or you've entered it as an adjusting journal entry or you've entered it as a customer payment, it allows you to look at where you might have, made an error. And you can fix that error. You're not changing the amount of the payment. You're not changing what came out of your checking account or was deposited into your checking account. You're just going to modify the way it was categorized. And I want to caution you about, I say it's really easy to do it, and it is, but it's easy to kind of, make a change in a previous time period, which I would never encourage anyone to do, so that when you're looking at your end of year 2015, as you're working through 2016, you're not going back and changing stuff in that previous period. You're always going to be looking at January 1st going forward. And then if you do need to make changes, you're working with your accountant. Once you close that time period, there's a way you can protect yourself from making changes just by putting a closing date in your book so that you couldn't go back and make a change in 2015 inadvertently. So what we're going to do is we're just going to move through. I want to make sure, there we go. So we're going to move through Larry's landscaping and garden supply business. And when you pick up a profit and loss statement, and when I look at this profit and loss statement, I'm going to collapse it just a little bit right off the bat because I just want to get a sense of what the revenue model is for a business. And I mean, this can be pretty informative when you're looking at it and you're saying, okay, I know that we're in a landscaping and a garden supply business. And so it's going to have some services affiliated with it. And you want to set up your categories. You can have as much detail as you want, but I would recommend you not get too detailed in the way that you describe your income. There's other ways we can set up more information by classes. So when you first open a profit and loss, so I was in the reports area, I can go to the reports center, I can look at, I have reports that are memorized specifically for my business. I could look at the company snapshot, and this is going to be a real quick look at where we are, and we can add content to this, we can change content, but this is really your financial dashboard for your business. You can look at it and look at the last 3 months, and this is a company that has a fiscal year that starts in October, so when you see this year to date, it's just looking at October 1st through that first quarter, so I can get a really good snapshot. Oh, there's my expenses. My expenses are orange, my income's green, and I know for the first 2 months, I was profitable, and something happened in December. Maybe all my payments come in or my income's earned in the second half of the month, and that's what allows my income to exceed my expenses. I could look at my prior years. I mean, this is a really awesome piece of data when you're trucking along and you want to be able to see, wow, where was I at this time last year? How does my year-to-date compare to last year? I could look at my receivables fairly quickly. Who owes me money? Who can I call? And they might be 45 days out. There's somebody that has a due date, and I apologize for the dates on this. It is looking in the future, 2018, 2019, but we could jump into other segments here. I'm looking at this dashboard. I see customers owe me money. I can click on this link right here, and I could, go log a payment, go receive a payment. I get a really quick snapshot of my account balances, which, could be important, especially for a small business. We're really operating on some smaller balances, and we're always watching our cash flow based on what's coming in, what's going out. We have automated payments coming out, and we just want to make sure we're able to cover those amounts. Top customers by sale, so we can organize our income information and sales information, and then previous year expense comparison. So the thing that I want you to remember when we start looking at reports like customers or reports like my expenses and who are the vendors I owe money to, if you don't put that person in as a customer, when you set them up, you know, when you set up somebody in your QuickBooks, if you're making a payment and you're writing a check to, you know, Joe's Hardware, you need to click the box that allows you to select Joe as a vendor. If you're making a deposit or you're taking a payment from somebody that's paying for a service, you make sure that you categorize that person as a customer, because when you use a lot of these default reports, it's looking, it would show you, it won't show you those sales by customer if you don't have that person categorized as a customer. You could still attribute income to them, but it won't show them in these pre-configured reports. So that's just something to keep in mind. So this is where you could start. I mean, this could be your desktop. And again, it requires that you're going in on a fairly regular basis, weekly, and just updating all of your accounts and recording the payments and showing the income and you know, making payments on your expenses and updating your credit card balance and making payments on your credit card. Whatever that is, you've got to be doing that on a regular basis. And again, that goes into this process of here's how I'm going to do it, here's when I'm going to do it. And you know, if you have 300 transactions going through your bank account every month, or you want to probably be looking at this weekly. You know, we're talking about 75 transactions a week, you know, 15 a day, and this is like individual sales transactions that may be incorporated as one deposit, but there could be 5 different payments that come through that deposit information. So I do encourage people to go in and look at it every week and maybe even reconcile your checking account every week. You don't have to wait for that end of month bank statement before you take that step. So this is kind of the starting point. This could be your desktop every time you open your accounting software. When we look at the very first report, the profit and loss standard, and again, this is where you can kind of look at it, you get a sense of, does this really reflect my income, you know, the way I do business? And so I have some service elements to my business and the way I generate income. I have some, I get paid for, you know, the labor piece. I have a design service. I have really tangible materials that I'm putting into these projects and they're paying me for that. And I have some markup. So the first thing you want to do when you're looking at a summary, and we're looking at income categories, and there are 2 things that should be jumping out at you right now, is that I have negative income. And I could have a contra income account that was like a discount, in which case I would want it to be negative. But that would be a almost a subcategory. It would be a standalone category. When I look at decks and patios on this particular income statement, I see negative income. So something happened, I goofed up somewhere, and I can double click here and it'll show me the transactions, and it's just going to show me the transactions within this time frame that's right for the income statement that I'm looking for. So I could actually go back farther, and if there were more transactions in October and November, they would show up here. But something happened right here where I recorded a check and it went into my landscaping services, decks and patios. But wait a minute, that was really an expense. So you need to be careful when you're right here under, when you're naming your categories. A lot of times you could start typing when you go into that first cell for expense, and it'll try to outsmart you and anticipate what you're going to type, and it'll sometimes default to the last thing you did. So we realized, oh no, that wasn't income, it was really an expense, and we need to change that. So hold on here. I just saved it. So now we've moved it, and it ended up going into my operating expenses down below. So this is a really great way. I didn't really change the amount. I mean, negative income is really a positive expense, so I just moved where the amount shows up on my profit and loss statement. Now I've got another thing going on here that doesn't look quite right. I'm going to click on that, and it looks like I made a payment here, and I inadvertently selected retail sales, and I was thinking that I was buying stuff to support retail sales, and I'm really just doing job materials. Something to think about when you go in and create these subcategories. It's a really easy thing to do in QuickBooks. So now I have this thing called job expenses, and then I create a subcategory called equipment rental, and I have one called job materials. Now I'm creating subcategories under that, with decks and patio. If I don't select one of the subcategories when I'm choosing my expense, it's going to create its own subcategory of other. So if you're going to have subcategories, it makes sense to use them all. Make them meaningful, because now I've gone down and I've created some this is something else that I was showing you negative stuff for. So if I go into my job expenses, see now down here, I still have those subcategories, and we're going to come back and correct these, but because I didn't give any detail to this job expenses, it just creates this other account. And I think if you're going to create sub-accounts, use them all and make enough to accommodate all the expenses instead of having this other hang out, especially when it's such a large expense. You want to figure out what it is, so I can just click on that number. I dive into the detail. I can dive into this detail, and I can go in and say, oh, that was really plants and sod for that job. I haven't changed the amount. I've just changed how it's been reported on my my expenses report. So the expenses portion of my profit and loss. So how do I know if I'm doing okay? I mean, we always look at the bottom line and we think, oh wow, I'm going to change this to year to date because it's a little more this fiscal year. So you do have all these options up here to change the time period that you look at. So we could just change it to this fiscal quarter, and it automatically updates this, and it changes this time frame here. We could show, I think this is a really fun place to explore, is you can change this total column. So I could look at it by month. I could break down my profit and loss so that I'm seeing it, I'm seeing more of the trend in terms of how each category breaks out by month. It just defaults to total, but there's a lot of detail that you can go into here that would be meaningful to some more than others. So the one place I like people to think about is creating a thing called class. So in this particular instance, they've recognized their services as a class, so that I have design services, and then I've classed it as a design, and I have materials that are classed to landscaping or maintenance or overhead. So let's say that you're a small business and you have, let's say if the Women's Business Center has 3 grants that it's reporting to, it's going to break up all of its expenses to those grants. Or if you have a business that does retail and wholesale and online, and you want to you can break it into income categories, but at the same time you can support it with class categories. So in this one that I think is a really interesting way to do the overhead is they show this overhead category where some stuff is a direct under the expense category. Some of the payroll is going to be direct to design. Some of the payroll is going to be direct to this category of landscaping, and then the rest of it's going to fall into overhead. And then you have some that's not classified. So this is a great report if you are doing classes, but it also gives you kind of a self-check to see places that you forgot to enter your classes. And this is something that you'd go in and do. You know, if you're going to have the class, you might as well use the class. Otherwise, you'll have expenses that just are going to kind of be appearing, but they're going to be appearing in the unclassified. So I can collapse this, and I can look at it by total, and I still see all of those expenses and revenues. But when I break it out into class, it's a little more meaningful if I'm trying to report to a particular you know, if I want to report retail sales, or I can see what percentage of my business is wholesale, then I'm going to have some supporting class categories. And that's a very specific step that you take when you're doing your company setup in QuickBooks. So we've done the snapshot. We've looked at this is going to be your go-to for most of the time, is looking at your current fiscal year. You may be looking at it by quarter. You may be looking at this month. There's so many ways that you can look at company and financial. You can look at it detailed, year-to-date comparison, which this one I don't think has a lot of good data, but this is awesome because I always like to look at where I am right now at this point in time and where was I last year in the previous period, because I want to see changes. I want to see what the difference is. If I want to go to customize this, we can go up here to customize report, and we can just really quickly change what we want to look at. I don't really care about the dollar amount. I'm just going to go ahead and look at the percentage change, and it's going to add that column. It's going to look at the previous year, same time period, and it's going to tell me what how I'm doing. This is really important information. So profit and loss, lots of choices with how we go in and look at the profit and loss piece by class, comparing the previous year. You can add a lot of detail. But we're going to go back to this profit and loss. And another way that I like to look at is that, you know, this collapse button is really awesome up here. You can collapse or expand, and then we can customize report, and we're going to get rid of the previous year. So we can either select the previous year's report, or we can go up here once we've selected a report and you can change it. So we could add a column, or add a year-to-date, or add percentage of expense. This is another really interesting thing, so that we can always look at our expenses as a percentage of our income. So we know that our net ordinary income down here is 12%. Those are really good, you know, good statistics to be focusing on. I'm going to take a quick drink here. Okay, so we like to have all of our income showing up positive, and we like to have all of our costs showing up as a positive amount here. We don't want to see negative amounts. But down here we see a couple negative amounts, and it just allows us to check our work. I mean, you always want to be able to go in and see, well, what did I do there? Boy, that was not very smart. And so I can just click on this, and I can tell it what I did here was I credited my credit card. So maybe I did get a rebate on my credit card. Maybe it really is a negative amount. I mean, it's a negative expense is income to me, but if I get a rebate, I might just put it in that finance category, because it's not going to be something that I'm probably going to move above the line to show as income. It's going to be a wash through my total expense. And here's interest expense, and here's something, oh, I probably goofed up this credit card charge. I put it all to interest, and I might not want to. That's probably not really what the category was. I could have, I would change what I did here in terms of, this was a credit, so I'm going to get rid of that credit. And once you know, this is one time where you are actually changing an amount, but it's so easy to correct your work after you do that. So we like the $50 negative finance charge. It shows we got a rebate. Now sometimes you can be looking at this and thinking, okay, those are all positive expenses, right? Those are all credits. So let's see if there's anything that really jumps out at me. Oh, wait a minute now. There's something funky going on with my payroll expenses. And usually my payroll for this time of month is maybe like 12, 14, 15,000. So I don't always see my mistakes just at first glance, because I can see some of these negative things that I need to fix. This was a negative thing where I think we did this one last week, where they overpaid. But let's look at this one. Sometimes you have to just click on the number, and then when you do that, you're just going to be able to scan. And I'm looking through here, and oh, I see what happened. Well, the owner took a draw, and it got categorized as payroll expense. So we're going to double click on that, and we're going to go in and make sure that we've correctly categorized. We got to go up for those. It's going to be right there. So this is an important thing for folks that are business owners, sole proprietors. When I do take money out of the business, I'm not expensing it to the business. I want to make sure that it's not showing up on my P&L, because if I'm a sole proprietor, this is my income right here, this net ordinary income, or the net income down here, and that's what I'm reporting. I'm not reporting what I draw out of the business. I do my draws as a balance sheet account. So I tend to go a little fast, but if you have questions, be sure to submit them to Jonathan in the chat box, because I can't see the chat box right now. So do you have any questions yet, Jonathan?
No, not currently. We do not.
Okay. All right. So we've looked at the P&L standard. I mean, that's where you're going to start out. You might want to organize your P&L by class, looking at your profit and loss by all the different activities. You can look at your profit and loss statement as a percentage of income. But this is a really good starting point for you to be looking, for errors. I mean, all the data that's going in needs to be categorized correctly. You need to make sure you have your, accounts set up as the correct type of account. And, just try to avoid naming things very similarly, because sometimes you could be putting in a check and it might think that you're selecting an income category if you have very similar names. So, and then using subcategories, if you're going to use them, just be very deliberate in how you use them and make sure everything goes into one of the subcategories. So here's a step that I sometimes take when I'm looking at long-term data. So like, let's say that I wanted to go into this and I want to look at the previous fiscal year and this fiscal year, and I'm going to go in and I'm going to look at it by quarter. So I'm breaking all these down by quarter, and I can make my margins a little smaller here, my columns, and then I can see it all. So now I have 5 quarters worth of data, or I guess 4.5. I'm going to collapse it. Sometimes, what I like to do if I want to do a graphical representation of what I'm doing, I will export this into Excel. It's a really easy thing. You just go up here and you click on Excel. Sometimes there's a different name on the tab or on the button. It might not say Excel, it might say Export. But this is a great tool if you have some information in here, and let's say I want to show my sales quarterly, but just by total income. I can show my total cost of goods sold, and I can create a new worksheet in Excel, and I can go in and create a lot of graphs if I wanted to. I'm going to go into it, and all I'm doing is exporting it, giving it a name, and then it looks just like this. You don't see the header, you don't see the footer, but bam, I can go in and create like a longitudinal graph where it just shows sales by quarter for the last 5 years. And this particular company data set doesn't have a lot of a longer timeline, but I think you could see how that could make a difference when you're a small business and you're looking more at the trends and you want to look at it quarter to quarter to quarter. Is there really seasonality in my business, or just does it wash out evenly? And is there any kind of increase that I'm seeing over these past few quarters? Because usually that's what you want to see when you're a small business and working hard to make it grow. So,
Kim, we have a question. The question is if the individual has been using QuickBooks, or I'm sorry, Excel to track their numbers, is it possible to do the opposite of what you're doing right now and bring in the Excel spreadsheet that you've been using and have QuickBooks be able to decipher and put in the information that you have put into Excel, or is that too difficult, I guess?
It's not difficult. I'll tell you how I do it. So, there are ways to import and export into QuickBooks, but it's looking for very specific types of entries. So, we move our loan payment information from one program to another, and it knows to bring in, the payment, and it deposits the payment into a particular account, and it shows the principal, and it shows the interest. So what I've done, if I have a lot of historical Excel data and I want to start my company in QuickBooks and I want to archive that historical information, I go in and I do like an end of, I go in, it sounds really convoluted, but I go in and make a general journal entry. And I bring that data in as one general journal entry. So it's got a balance, but let's say that when I came in and I created this company on September 30th or October 1st, and I go in and I put in all of my expense categories as debits, and I put in all of my income categories as credits. And it's going to balance by having, and my last entry is going to be into an owner's equity account. So like, let's say that I wanted to put in 2016, I could enter it as adjusting journal entry. And like, let's say I have a tax return from my accountant for 2015, I have a tax return for 2016, I could enter that in one place as one adjusting journal entry and get QuickBooks, so that all of a sudden I would see a profit and loss in QuickBooks. I don't have the day by day, week by week, month by month, quarter by quarter comparison. I just have that one point in time when I could go in and look at that, whatever that date that I put that entry in, and I could load the data that way and generate a P&L to move forward. So that first year, I don't really have a sense of, I have a sense of comparison to the previous year. I just don't have a sense to the previous quarters. It's not broken down unless I put it in by quarter. I could put it in by month. You could go in and create it that way if you wanted to. I think you need to think about if it's really important to do a comparison and give you some historical information in QuickBooks, that's the way you would do it. And then you could go in, you could pull a profit and loss, you could pull it for the past 5 years, and you'd be able to look at it by year. So if I change this to like 16, and of course there's not data there, but right here I could select it, and it would show it by year. It's just that I couldn't go into any day before the last day of that period when I entered that adjusting journal entry. So there's a way to take an Excel spreadsheet and load it in. There's a way to do that, absolutely.
Thank you. And it sounds like you can bring it in and then reorganize it if you like.
Oh, definitely, yep.
Okay.
Yep. I think what you want to do, when you bring it in, is you're thinking about that you want your chart of accounts that you've set up in here. We're not doing a balance sheet. We could do a balance sheet.
Right.
But we're not going to, right now I'm just talking about bringing in the P&L.
Right.
And what's going to happen is the income piece of that profit loss that you load as an adjusting journal entry flows then down here into retained earnings, or an opening balance equity, I guess would be where you put it for your first entry. So the leftover, which is income or loss, so I'm listing all of these incomes from the previous year by category if I want to. I'm listing all of these expenses, and then there's a net to balance that out between the credits and the debits, and that net is going to be what goes into to my owner's equity, or it's kind of like my opening contribution. And it could be a loss, and it could be income from depending on how my expenses compare to my income. Does that make sense?
Yes, thank you.
Okay, all right. Well, that was a really good question, and I have done that, and I think that the time that I've done it, I did it on a quarterly basis. I had some financial statements when we had transitioned from having an outside accountant doing our financials to doing it in QuickBooks within the company. I took their financial statements for the quarters and I entered them, and I had wished that I really had done it monthly, but I just really didn't have the time at that time to spend really breaking it out, because it can be kind of complicated in terms of the balance sheet piece if you want to do the balance sheet part. Okay, so we've talked about graphing the long-term historical data. Now let's talk about what this data can mean, because I want you to think about, I've generated this profit and loss, and I want to be able to make some sense of it. How am I doing compared to industry? And so there's some great tools out there that will allow you to say, okay, here's what my profit and loss looks like. How do I compare to other businesses in my industry? It's a really important question, and maybe you don't care. And maybe you feel like you're really profitable and you don't need to change things up, but at the same time, let's go out and see what's going on. This is a BizMiner report for a bakery. So the way you get a BizMiner report is you call up Jonathan and you say, I'd really like to get some information about other businesses in Wyoming or in the region that look a little bit, they're doing what I do, and then Jonathan can make a request to the Market Research Center, and they can pull these financial reports for you. So you can look at other businesses on the time, a continuum of the last 4 or 5 years. You can see how they look with regards to revenues, cost of sales, their gross margin, how much are they paying officers, how much are they paying, in terms of outside salaries. Really important data, because the way I like to use this is I like to look at the margin analysis, where you're saying, you're pulling your profit and loss. So we're in QuickBooks, and we're in our financial statement, and we're going to go back to that one, and we're going to add that category of, let me do this quarter, this fiscal quarter. We're going to add that percentage up here, percentage of income to this. And it's going to say, okay, you have, it's all based on income. So you have 100% income right here, and it breaks it down into categories. And you have 7% cost of goods sold. Wow, that's a really awesome margin, because if somebody pays me $1, it only costs me 7 cents to generate that bill of sale for that. I mean, in terms of the service I'm providing, and granted, a lot of this is really heavy on the service side, so you're not going to have really high direct costs on the cost of goods sold side. But I can go out and say, well, let me see, and this is the only sample I had for an industry report, but let's say I'm a bakery and I'm looking at a 20% cost of good margin on my bakery. I'm going to go out and look at what the industry is doing, and I either have a great markup policy or I'm underreporting my cost of goods sold, because there's some significance and difference in terms of the cost of sales that I see here, the direct cost in generating that, and what I'm seeing from my business. So great place to just go get some third-party data to take a look and see, wow, am I paying too much for rent? Am I paying too much for advertising? Can I be more profitable by eliminating some of these expenses that I don't see occurring with other businesses? Now, every situation is differently. You may own your own building and rent back from yourself for your business. I mean, you may be paying rent to your brother-in-law. I mean, there's just so many different variables that could come into play with how to view your financials and what the costs mean. But this is a really good sense of comparison for you to see how you're doing compared to other businesses. So this is available through the Small Business Development Center, the Wyoming Entrepreneur. It's available through, you know, any of your economic development agencies. If you want to make a connection with the Market Research Center, that's going to be a great resource for you, a great tool to take a look at. So just ask for a BizMiner report. You can take the same report and look at the balance sheet side of it, and we didn't spend a lot of time on balance sheet today, but you know, you can look at your cash assets versus your receivables and your inventory as percentage of the value of your balance sheet, because maybe your inventory carrying, you know, you have way too much inventory, or, you know, what are some of the red flags that you might see in terms of how do you compare to some of the industry standards out there? And these are based on a lot of businesses, you know. So, well, this one in Wyoming, it's a little trickier because this is looking at 7 firms that are in the $500,000 to $1 million category, but they do have other categories, and I think for this one we could look at just bakeries in general. So you'd probably be able to find your type of category if you're a law firm, or you're a manufacturer, or you're a wholesaler. You'll be able to find some industry-wide data and look at, you know, here in this instance there's 36 firms analyzed, and average business revenue per firm is in the 400,000 mark. So, you know, and the cost of goods sold, those are the kind of things you want to look at, or really the big picture things, the strategic things that you need to be thinking about when you're looking at your profit and loss, saying, you know, what can I do to net out more income when it comes to the very bottom? You know, how do I can increase revenue? Does that mean selling more? Does that mean setting a higher sales price? Does it mean somehow lowering my margin of the cost of sales? Where can I cut expenses to make that bottom line a little more attractive? So that's a great tool. I just want to throw that in there as, you know, where do you go from here once you're looking at your profit loss and you're able to see how you're doing, but then you might want to make a comparison to how other companies in your industry are doing in your region. So a lot of times it's hard to just focus on Wyoming, and you might want to look at a broader area. So we've taken a look at, oh, I thought we had that. So we've taken a look at the profit and loss, and when we look at reports, you know, there's a lot of other areas. One area that I think is a really great place to look at and to kind of check your work would be in the employees and payroll, because at the end of the quarter, those of us that have employees, we have to go in and we have to look at, okay, we've got to fill out this thing for Wyoming Department of Employment, and they're going to want to know how many hours the employees work by quarter. So you could just go in and do a summary report last calendar quarter, and it'll tell you the hours, and it will tell you the wages, and it will you can kind of look through here and make sure that you're accruing your payroll taxes correctly, because you want these things to be matching. What you're withholding up here, you want to show as an employer contribution and employer tax down here. This is a really great report to just, you know, check your work again. We're going back in and we're trying to tie our totals to what we're reporting to these outside agencies, and we want to feel really confident that our work is correct. So that would be more of a payroll thing. So as you can see, this is always prompting me when I make a change in a report, I can change the setting. So I can go in and create a lot of customized reports, and I can memorize them so they could be unique to my company, and I can go in and sales reports are really cool, but you have to make sure that you've correctly categorized. Like if I have sales by item, I could go in and look like at a product mix for my sales. I always like to start out with collapsing things, and then sometimes you can get rid of columns if you don't really need them. I don't really want to look at this stuff right now. I just want to look at my sales. I want to look at overall sales for the first 2 weeks. I did 19,000 in sales, and look at that. Most of it is in the service, which we really like, because that's going to have some of the best margins for us. When we look at sales, we can look at sales by customer. Again, that really wants you to think about correctly categorizing the people that you're receiving money from or paying money to. The vendors and payables, I can go in and look at those really quickly. There's my summary. I can check my work again because we don't usually see negative numbers in payables. And what happened is, well, I must have made a payment and I attributed it to accounts payable, and I probably should have just expensed it out as my telephone. See, so there again, it defaulted to a customer name, and I need to have a vendor name in here. Otherwise, it will allow me to, wait, that one should be okay. There we go. So we get rid of, so see, do you see how easy it is just to move stuff around, recategorize it? You can go back in and fix things. The same thing when I have reports payable or accounts receivable, so I can look at that. It defaults to the standard thing. I usually collapse it because that has way too much detail, but here's a payment I got from Andy's Candy Shop where I recorded the payment because usually you don't see negative receivables. I record the payment and I attributed it to my receivables rather than just attributing it to, because I had never put an invoice in there for that payment. I made a deposit and I said, oh, this came from Andy's, and really what it should have been was a purchase. I can go look at that deposit and I should show it right here. I could show it as an income category, whoops, instead of doing it as a receivable, and then it disappears to my receivable. So, you know, negative numbers in these reports, you know, it's just going to be a little red flag for you. I've got a deposit from Jennifer. I attributed it to her account, but I hadn't recorded an invoice against her account. So it says, wait a minute, she basically has a credit. So another great place to check our work, because it really does come down to being able to go back and knowing that your data's gone in correctly. And let me see if I can get back into, there's our spreadsheet. Okay. And we are getting close to the end of the hour. It comes down to the reason that I love a tool like this is it really puts you in charge of understanding the financials of your business. You need to get advanced enough in how you use the tool so that you're aware of what's going on in your industry and what specific categories or reporting requirements you have. You get a software and you develop the categories and the classes that can support whatever it is you need to report within your organization. You're going to have some kind of process to say, all right, these are our policies for recording payments. These are our policies for recording loan, you know, if somebody's paying us on a loan or we're making a loan payment. I'm going to have a little procedures manual that creates those steps. It identifies which payment goes where. Is it a debit or is it a credit? Because you could, once you get this in place and you work with an accountant, if you're not comfortable making some of these early decisions, you can do this. You can really keep track of this for your organization. And at some point you want to hand off that baton to a bookkeeper. But you want to be able to know what the process is supposed to look like so that when you pull a financial, you can say, oh, whoops, that amount doesn't look right there. I mean, I've got a negative income. What's going on? Because you can go in and then proof that work. But until you really decide what the process looks like and what your how you want to record the transactions, you know, it's going to be, it doesn't have to be something really sophisticated in terms of a manual, but it just has to be the appropriate steps. Because you want to have somebody on your team that can do that. You want to have an accounting professional in the advisory capacity, but you could also really start giving away some of the bookkeeping tasks to, you know, a bookkeeper. And they understand the process, but you have to be able to review the work and get, you know, the key is real time. the data's going in on a regular basis. You understand how it's going in and how you're going to read it and how you're going to kind of look at it and have it make sense for you. Because I mean, you really see how easy it is to go in and review information and change information and update it if it needs to be tweaked so that it, it's going to be correct. Your ultimate goal is the end of the year, you create a working trial balance for your accountant, and they use that to go in and generate your financial statements, because you don't want to hand them that box of receipts and ask them to do that work for you. Other questions that I can address, again, this is something that we can interact one-on-one online. If you have specific questions about your business and you've created a balance sheet, or you do want to do that first adjusting journal entry and set up your QuickBooks file and have some previous year history coming in, we could do that. One area that we didn't touch on was the budget report. It's a pretty powerful tool in QuickBooks where you can go in and put your budget in and then go in and look at a report that compares your budget to actual. Here's what I spent in the first quarter, here's what my budget was. And this could be really good if you want to go in and do it for classes, where you have a lot of different, 4 or 5 different classes where you're budgeting certain activities for that class, and then you can compare to how it did on the actual. I mean, that's a really good thing to look at. So I really like to open it up for questions. If anybody has any, we can connect offline and talk about your specific questions. Again, just keep in mind that there's lots of resources out there to help you. So, just don't hesitate to raise your hand and ask for the help.
So unfortunately there's no more questions, but we do have a comment, and it says, excellent job, thank you so much for the presentation. I'd like to thank you, Kim, very much for all the work you've done and all these presentations. It's excellent information, very, very helpful. And everybody, thank you so much for joining us, and please make sure to fill out the survey at the end, and like Kim said, if you do have any questions, please reach out and get in contact with Kim or the Wyoming Women's Business Center, and we'd be very happy to help you. So thank you again, and please make sure to fill out that survey.